credit score has such a big impact on what your mortgage interest rates are going to be. I think there's a huge misconception when it comes to buying a home, and that's, everybody gets the same interest rates, and that's just not true. So a lot of the time when you're purchasing a home, your credit score is one of the biggest indicators as to what type of rates you're going to be offered. And the way I always try to explain this is it's almost think of like a report card. Okay, so like if banks are considering giving you money to purchase a home, right? So let's just like high level. When you buy a house, unless you're a cash buyer, which some of you exist, but most of us do not, we are borrowing money from a bank to buy a home, right? We do not have the money on hand to buy the home outright, so we have to borrow money from a bank. That is what a loan is, right? And then that bank charges us interest to essentially make it worth their while to give us the money instead of keeping the money in their own account. So that's what a loan is, okay? And the interest rate that they charge you is how then they make their profit. Now, what people don't often realize is that banks assess the risk that comes along with giving someone a loan. And there's two kind of core things that they're going to look at. The first is going to be your credit score. The second is going to be the amount of money you are putting down. So truthfully, a lot of the time when people put minimum down on a home purchase, the rate can be slightly higher, not a ton, but again, like to a bank, it means that you are putting as little skin into the game as possible. So there's a little bit of risk associated, but the biggest indicator that I see is going to be your credit score. So again, your credit score is really where they are looking at your financial history. How much debt do you have taken out? How high are your credit card balances in comparison to those limits? I'm gonna tell y'all, late payments, y'all set your shit up on auto pay. And I'm gonna just say it like that. There's no other way to say it. Set your freaking accounts up, all your credit cards, all your car payments, all your utilities, all your student loans. Y'all, the amount of people that I see get their asses burned on student loans having late payments. A lot of you, if you've had student loans that, the accounts are in deferment and they are coming out of deferment, there have been so many people that they had like their old like college home address or something set up. And when those payments started to come due, they didn't get the bill like at their current address. And they've had like 6 months of late payments that now on a loan, we are not looking good. The other thing that people don't realize is the credit score that you see on your credit card app. So like your Capital One app or any Credit Karma, that is not your real mortgage score. Link on my profile, if you click on the first option, you can kind of go through like a process where you can run your own numbers. My FICO, and I am not sponsored by them, I do not get paid any money from them. My FICO is the only place that I recommend that my clients go to look to see what their mortgage credit score is. A lot of the time, not always, but a lot of the time, it is pretty significantly lower than what you are seeing on Credit Karma, or again, like any of your Amazon credit card, your Chase, your Capital One, right? Like those credit scores that you are seeing are not often what we see when we actually pull your mortgage credit score. And the reality is that your credit score, y'all, it's your report card, right? Are you an A+ student? Do you have like low balances on cards? Do you pay all of your bills on time? Do you have like a long credit history? The more trustworthy you look on paper to a bank, they feel better and they feel safer allowing you to borrow money, so your interest rate is lower because they don't feel like you're as high of a risk. When you have high utilization on cards, when you are making late payments, right? Like when you have if you have things in collections, you look like a red flag. And listen, I am not judging. Shit happens, life happens, things happen. Like, I'm not saying that's not a thing, but I am telling you as a mortgage professional, when I look at your score, even without running rates, so as a broker, I shop between 20 and 40 lenders at a time every day when I price things out. And the truth is that your score is what I see is like the biggest indicator of what you're going to see from a rate perspective. So sometimes I'll see people when they look at the news and they're like, well, hey, like the news is saying that the average, interest rate is this. Why is mine this? Okay, well, if you're chilling with the 620 and what you're looking at are people that have a 760 and higher, you're going to be offered a different interest rate, right? And, the reality is that, I really encourage all of my clients. Like I work with a credit specialist, like a credit repair company, especially when I have clients that have between like 4 and 6 months before we're looking to purchase, because that's enough time to make some improvement on those scores. It is something that I think people do not realize how much of an impact it can have. I mean, like I've seen people where we start off and they're in like the low 600s. And like, I'll just give you an example. Like maybe the rate that they're offered is like a 6.875. They work on their stuff, they get everything caught up, they pay down these credit cards, right? A couple people even work with this like credit specialist I work with. Again, like I don't get compensated on that. I just have a resource for people who need it. And then 3 months later, they're then, let's assume like the market's the same. I mean, their rate can drop all the way down to like a 6.375. So we're talking about like almost a 0.5% less on an interest rate. So this is just to say, not everyone's going to be offered the same, interest rate. Probably the biggest thing that you can do is fix your credit. Get that score as high as you possibly can. Go to My FICO. There's 2 tiers. There's a free tier that does not give you the mortgage credit scores, which is annoying. It just is what it is. They have a middle tier that will give you a mortgage credit score every 3 months, which is like fine if you're like far out. And then they have like a top tier, which will give you your mortgage credit scores every month. I would highly recommend, if you are not at like a 740 or higher and you have between 4 and 6 months, y'all, it is worth the like $30 or whatever the monthly cost is to get in there, log in, look to see what your scores are, look to see what they tell you the improvements are that you need to make to get your score higher, because that is probably one of the biggest factors that I see people get whomped on. And honestly, almost even more so if you're actually going to be putting a big chunk of money down. Because again, a lot of the time my clients, they do put minimum down. That's just like where we are today with home ownership. But I do have clients that do actually have a ton of money saved. And the most painful thing ever, y'all, is when I see somebody and they have like 15 to 20% to put down and they have a 700 credit score. Because I'm like, oh, shoot. Because I know that the rate that we're going to get is just not going to be a top tier rate because they are below that 740, 760 range. So again, late payments, y'all set your crap up on auto pay. If you have things in collections, you need to get that mess sorted like ASAP, okay? You need to call, figure it out. Again, like if you don't know how to go about that, please feel free to message me. I am more than happy to connect you with a credit repair specialist to get in front of this before it becomes a problem. Because yes, can you buy a home? Definitely. Will banks offer you money for a really high interest rate? Yeah, absolutely. But why would you do that, right? Like as somebody who cares about your financial success, I really want all of my clients to genuinely get the best deal that they possibly can. The way that happens is by getting those scores to a better place, because truly, I think people do not realize below a 740, you're going to be offered something different. Below a 720, below a 700, below a 680, the bank looks at you as a higher risk client, and therefore they charge you for that risk. So work on your credit. Also, get your scores now. Like plan ahead, get on top of it, make a game plan. If you need any support on this, again, feel free to message me. I know credit scores are like kind of a personal thing. I am personally not a credit specialist. That is not what I do, but I will tell you every day that is probably the biggest difference that I see between people getting like really phenomenal interest rates versus either a little bit higher or quite a bit higher than what is published on the news. And y'all, it is almost always boiling down to credit score. All right. Love you bunches. Hopefully this was helpful.